FHA versus conventional. Which one actually saves you more money? Everyone assumes the FHA is a first-time home buyer loan. Like, that's just the default. You're buying your first home, go FHA. Here's the deal. The assumption is costing people thousands of dollars. FHA is not always the move. And today I'm going to show you the math so you can decide for yourself which one actually wins for your situation. I'm Dave with KeyPath Mortgage. I run 2 brokerages. I work with buyers every single day, and this is one of the most common questions that I get. So FHA or conventional? Let me break it down for you. Look, FHA has some real advantages. 3.5% down with a 580 credit score, you can get that loan. More flexible on debt to income ratios. It's easier to qualify for more house. But here's what they don't put on the brochure. FHA comes with 2 layers of mortgage insurance. First, there's an upfront mortgage insurance premium. That's 1.75% of your loan amount added to your balance at closing. On a $300,000 loan, that's $5,200 tacked onto what you owe before you make a single payment. Second, there's a monthly MIP. That's mortgage insurance premium. On most FHA loans right now, that's running at 0.55% of your loan annual. On a $300,000 loan, that's about $137 a month. And here's the kicker. On FHA loans with less than 10% down, you pay that monthly MIP for the life of the loan. Never goes away the whole 30 years. You can't cancel it ever. So that's $137 a month times 12 is $1,644 a year times 30 years. You're looking at nearly $50,000 in mortgage insurance over the life of the loan. Now, are you going to keep that loan for the whole 30 years? Probably not, but it's something to think about. So what conventional actually costs you? Let's look at conventional, which requires a minimum of a 620 credit score, but honestly, you really want to be a 680 or above to get the best rates with conventional. And less than 20% down, you're paying PMI. So almost the same thing as the FHA. Here's the big difference. The PMI on a conventional loan with 10% down runs about $80 to $130 a month on a $300,000 loan. That's less than FHA already. But once you hit 20% equity in the home, PMI goes away. So you call the lender, you request cancellation, and it's done. So you're paying maybe $100 a month for a few years, and then it's gone. Versus FHA, $137 a month forever. Let me tell you where that lands. If you hit 20% equity in 5 years, and in most markets you're still able to do that with appreciation, that's realistic. You've paid about $7,200 in PMI, and then it's done. You'd have FHA, you'd have paid like $8,200. By then, you're still paying for it for 25 more years. So let's run this side by side. Same buyer, same home, $300,000 purchase price, 5% down with a 6% interest rate. FHA, your loan amount's $285,000 plus the upfront MIP of $49.87. So you're actually financing $289,987. Your principal and interest for that is around $1,740. Add your MIP of $133 and you're at $1,873 a month. So conventional loan, same $285,000 loan amount, principal and interest at 6% is $1,709. PMI at roughly $110 a month. You're at $1,819 a month. So that's $54 less a month on conventional right out of the gate. And in a few years, when that PMI drops off, you're going to save $219 a month compared to your FHA payment. Over 10 years, it's $26,000. Real money. So FHA is not always wrong. There are situations where FHA is absolutely the right call for you. If your credit score is below 680, FHA is probably going to get you a better interest rate than conventional because conventional loans get the rates adjusted based off credit score, debt ratio, and a bunch of other factors. And FHA doesn't hit you as hard on that. If you're at a 580 or 619, anything below that 620 mark, FHA is probably your only real option right now because it's going to allow you to get into that house. If your debt ratio is higher, FHA allows up to 57% in some cases, where your conventional is going to top out at 45 to 50%. If you're carrying student loans or car payment debt, FHA might be the door that opens when a conventional doesn't. So here's my honest take. FHA is a great loan for the right person. The mistake is assuming that it's the right loan just because you're a first-time buyer. Here's when conventional is almost always better. If you're a 680 or above, run the numbers on conventional first. You'll likely get a better rate and lower mortgage insurance. If you have any chance of hitting 20% equity in the next 5 to 7 years through appreciation, extra payments, or a combination of both, conventional wins in the long term because the PMI goes away. If you're in a competitive market and the seller's looking at multiple offers, conventional offers are often viewed more favorably than FHA because the seller knows that FHA has stricter appraisal requirements and they worry about the deal possibly falling apart. Maybe you got bad credit or something wrong with the house. So if you can put 10% down or more The math almost always tips towards conventional. So look, if you were my friend and you came to me and you wanted to know, here's what I would say to you. I'd pull up your credit score, look at your debt to income, look at how much you got for a down payment, run both scenarios side by side right in front of you. And I don't push one loan or another. I run super transparent. I'm going to show you the numbers and let you decide, because at the end of the day, you're going to be making the payment, not me. That's the name of the game. So FHA or conventional, the real answer depends on your situation. And the only way to know that for sure is to run them both side by side with your actual numbers. That's exactly what we're gonna do with our mortgage strategy sessions with my team at KeyPath. We'll look at your credit, your income, down payment, debt ratios. We'll show you both options side by side so you can make the right call and get the best savings from the new house that you're looking at. Worst case scenario, you're gonna get some great information and walk away knowing exactly which loan saves you the most money. Links are in the description. Subscribe for more real talk mortgage content. See you on the next one.